you can see here that we've got what many of you probably know or refer to as a bearish pin bar reversal here. One could also view it as an inverted hammer, or indeed a shooting star. Whatever it is, it's got a tail and it's got an open and close in the bottom third. So here we go. We've got the entry just below the bar, stop loss above the high. So we've got 167 pips difference between our entry and our stop loss, and we've got a potential target of 575 if we are targeting a new lower low here, which looks like it could be within the realms of possibility here, given that it's trending downwards. So it's below the 200 and the 50 moving average here. So if we look at 575 pips divided by 167, well, that's 3.4 to 1. So that means that's quite good reward to risk potential. So that if we're risking £50 on this trade or $50 on this trade, then we could, best case scenario, make 170, which is essentially 3.4 times 50, which equates to 1% of our account. We know full well that, sure enough, we might have the Bank of England making an interest rate decision in the meantime, or indeed New Zealand Central Bank. But whatever, we know full well that the worst possible thing that can happen is we lose 1 or 2% of our trading account, or depending on how much you risk, i.e. the equivalent of 167 pips risk. And the best possible thing that can happen, if we're proven right with whatever news announcement might be released, is that we could potentially make 3.4% risking only 1% of our trading account. So how about that? Not bad at all. So this is where we can really just take advantage of positive reward and not really care too much about what the news is saying and who's saying it or how they're saying it or what the number actually is. We can just simply go about our day, rest assured and content with the fact that we know what could happen, worst case scenario, and that's far worse than what could potentially happen, best case scenario. Okay, so we'll try another example here. This is, well, US dollar versus the Canadian, the loonie, as some of you might know it as. We've got a bearish pin bar reversal, hammer, inverted hammer, whatever you like to call it. It's got a tail and it's got the open close in the bottom third of the bar. Our entry is just below the low, stop loss above the high. We've got 86 pip risk and we've got 245 pips potential profit here. And say, for example, we've got a news announcement in the meantime. Well, so what? We know full well that if the news announcement is in our favour, it will help to perpetuate a winning trade to the point where we've got a 2.8 reward to risk profile. So if we're right and we're risking £100, then we can stand to potentially make 280 because 86 goes into 245. This 2.8 times. But if the news goes against us, then at least we can say that we took the technical setup that fulfilled our rules and we've lost small as well. Okay, but generally speaking, if this is a trend-based trade, what essentially it is making lower highs and lower lows, then the overriding sentiment is already priced into this market anyway. That's the thing. That's the thing about long-term trends and why trend trading is so good, because you're essentially just jumping onto the ebb and flow of the overriding dominant sentiment. You're not trying to trade a reversal and take those multiple hits which reversal traders typically have to endure. Okay, so we'll have a few more examples of this because even though this might seem quite simple, it is very important. And a lot of people really just, a little bit too free or a little bit too loose in their understanding of this. And it is quite a phenomenal thing when you get it right, even though it's not that difficult to get right. So, for example, if we're taking or buying the dip, for example, in an upward trending market, this was euro dollar quite some time ago. We've got, say, for example, 45 pips difference between our entry and our stop loss, and we're targeting 243. Then we know full well that we've got a decent reward to risk. We've got a 5.4 to 1 reward to risk trade. So we're risking 1% of our trading account. Say, for example, that's £500 or $500. Then we can expect to make $2,700 or pounds, with 500 equating to 1% of our trading account times 5.4. And once again, if news goes against us and causes our trade to stop out, then not only is that a long-term trend or medium-term trend, my apologies, negated, we've also just lost 1% of our trading account. Whereas if, say, for example, news does clash with this trade setup, then at least we know full well that if it goes in our favor, then we stand to make a lot more, or a heck of a lot more, than we stand to lose if we're wrong. That's the bonus. Okay, so last and not least, and a lot of people really overlook these range-bound trades, and range-bound trades are absolutely fantastic because it enables you to get a nice tight entry. But anyway, that's by the by. Here, for example, this is CAD Swiss. I know the chart looks very different now, but say, for example, we've got 38 pips difference between our entry and our stop loss, and we're targeting 508. This was a trade we took, believe it or not. Really fantastic reward to risk, 13.3 to 1. And it hits target. If it clashes with our trade or whenever our trade is open, then and it's in our favor, then at least it helps to perpetuate a 13.3 reward to risk potential trade. Whereas if we're wrong, then at least we can say that we took this technical setup anyway. Regardless, that's the thing. There's nothing worse than not taking a decent technical setup which fulfills all the rules, and you didn't take it just because of news, and the news just sends it in your favor anyway, and you just got no reason why you didn't take it. You were just nervous.